Hello traders, Gary Wagner here just before noon in Honolulu, 6 o'clock in New York. It is Monday, last day of April 2018, and this is the daily report for gold and silver. A strong U.S. dollar continues to weigh heavily on the precious metals complex, taking them lower, with gold closing off by about $7.30 today at $13.1610. A 14-cent decline in silver at $16.35, and a $3.55 decline in palladium at $959.45. Dollar index gaining about 30 points, 91.64, and a lower U.S. equities markets down by about 148 points. Dow currently at 24,163. Fractional upside move in Bitcoin futures, 92.80 and 93.10 in the CBOE and CME futures exchanges. Gold begins the week and ends the month trading under pressure, currently down almost $7 at $13.1650. The vast majority of today's lower pricing is directly attributable to dollar strength, and according to the Kitco Gold Index, we have spot gold currently trading off by about $7.20. And of today's move, we can see that $5.20 is directly attributable to dollar strength and $2 attributable to selling in the market. In fact, of the precious metals complex, the only metal to be trading higher due to normal trading is palladium, with a 75-cent increase in price due to normal trading. However, a $3.75 decline due to strengthening dollar does take the market down by about $3 on the day. This, of course, in the cash market. Futures market down about $4.50 at $9.58. We do have a long position. Our stops are well below current pricing, which are sitting at $9.49. Low of the day is $9.51. However, I did look to add to our position, but I will not add to our long position unless we begin to see palladium move back to an upward momentum and trajectory. And traders, as we spoke about at the beginning of this report, and in fact all of last week, it has been recent dollar strength that has been so adversely affecting the precious metals markets. And although we saw a potential sign of weakening on Friday by identifying a single candlestick called a shooting star, we certainly did not see any kind of follow-through selling come into the market today. In fact, by looking at a weekly chart, we can see the kind of major breakout that occurred last week in the dollar index. That is this single candle, and today's pricing on a closing basis takes us right at a level that could in fact be an indication of resistance. That is the 50% retracement at 91.56. And that, of course, is based upon a pretty large data set. The data set that we are looking at to obtain these numbers really begins when the dollar was trading at 78. This is back in 2014, up to these highs just below 104 that came in at the end of 2017. So the fact that we are now at that 50% point is a critical number that could in fact be greatly influenced by two major events this week, and that is the FOMC meeting, which gets off tomorrow, concludes on Wednesday, along with Friday's jobs report. Traders, maintain your current long position in palladium, maintain your current stop level as we await the first of these two events to begin tomorrow. Traders, there is absolutely no doubt that one of the greatest single underlying forces to precious metals pricing recently has been the U.S. dollar. Since the beginning of this month, the dollar has been on a tear, gaining about 3.5% this month alone. The question is, with the upcoming FOMC meeting and the jobs report on Friday, how they will affect the dollar, because ultimately it has been the dollar which has been affecting precious metals pricing. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.